Want to get to our Yahoo U segment and bring in Brian Cheung. So, Brian, we were just talking about Tesla with Jared there. We're going to be talking with you about growth versus value stocks. We've been discussing this as we've had the rotation that has been all the rage lately. Tesla, is that a growth stock? Do I have that? Can you help us figure out value versus growth?
Yeah, I think you've got that right, Jen. Tesla definitely is categorically a growth stock, but a lot of that is subjective. So class is in session, and today we're going to talk about value versus growth. Now, of course, as people, we would like to have both, but in the investing world, they're often distinctively used to refer to a stock's profile. So lately, you've been hearing the narrative that growth investing has been dramatically outperforming value investing, some of that maybe changing as of late. But it's important to note that there is no MBA definition or specific criteria to define one versus the other. But there are general characteristics that can help you understand what the difference is between those two different types of investing theses. So I want to show you a little bit of a breakdown of the different types of investing here. And I want to start off with growth stocks. So generally, growth stocks tend to have higher upside potential. So that could be measured as expectations for revenue growth or for earnings. But because of the quick growth and in some cases, the early stages of the company, the lack of reliable cash flow usually means that these companies have little to no dividends, which is a bit of a negative for these types of stocks. Now, lately, these types of stocks, especially as of late, are also kind of expensive to own. And a good way to think of all these things in summary is kind of like a sports car or a Corvette, right? It's a fun ride if you like the thrill seeking, but it may not be the most reliable vehicle to get you from point A to point B, and also might cost you a bit of a pretty penny. So that means that value stocks are kind of the Toyota Camrys or the Kia Rios of the world, right? They're not sexy per se, but they are reliable. It's going to last a while and it's going to help you stretch your dollar. So these types of stocks tend to have lower expectations for future growth, but what they lack in explosive growth, they're going to make that up in history. So they might have a storied reputation of paying out to shareholders, and they also might be a bit cheaper to own. Now, when I say cheap, we have to understand that stock prices are always moving, so the goalposts are always changing. And one way to measure this within the context of growth versus value stocks is this. It's called the price to book ratio. And the idea here is to measure the ratio of where the company is trading, the market price, relative to where the net assets are on its book, or the book value per share. So the idea here is, given the size of the company on paper, how high are investors valuing it? So one example is Tesla, right? Sorry, my handwriting is really terrible, but Tesla right now has a PB ratio of about 29. Again, a growth stock. Compare that to Ford, which is kind of categorically a value stock, which has a PB ratio of just 1. Now, lately, growth stocks, the sports cars again, have dramatically outperformed value. And what you're looking at right now are two ETFs that break up the Russell 1000, which is 1,000 large and mid-cap US stocks. So the purple line that you're looking at up top here, the IWF, is comprised of all the growth stocks in that index, whereas the IWD, the blue line here, is all the value stocks. So year to date, the IWF, you can see, has popped over 28%, almost 30%. This is in a year of the most vicious recession since the Great Depression. Compare that to the value stocks, which have underperformed. That's actually been down mostly year to date. So if we break up these two indexes by what's underlying them, you're looking right now at the Russell 1000 growth. And this is going to tell you a little bit about the profile of our market right now. The IWF, broken down into its top 5 holdings by industry, is mostly information technology. So think Facebook, Google, Zoom. There's also consumer discretionary, healthcare, communication, consumer staples. Compare that to value, right? Again, the Russell 1000 value. These are financials, healthcare, industrials, those types of industries, much less kind of weighted towards the information tech. Although I do need to note that it's not necessarily by industry whether or not a stock is value or growth. But the big story here has really been the pull on the market from these large tech companies. But there are other factors as well. Think about the low interest rate environment that has kind of pushed a reach for yield, taking on risky investments, things like that. But again, when it comes to buying that sports car or that reliable sedan, it's really all about what you're looking for in your investments. And that, in a nutshell, is value versus growth. Jen, Akiko.
Okay, Brian, something we're going to be talking about, no question, in the weeks and months to come.